Ripple XRP holders, we have some breaking news to bring to you in this video with the crypto villain, Gary Gensler, just testifying before Congress, and you won't believe what he said.
Thank you, Mr. Chair. Chair Gensler, I have a series of questions that require a yes or no answer, and in the interest of my limited time, I'd appreciate it if you would comply with that. Mr. Gensler, is it fair to say generally that large institutions in any given industry benefit more from regulatory uncertainty than everyday market participants or smaller institutions who don't have the scale or the capital to fund expensive compliance teams?
Large institutions could benefit from uncertainty.
Reclaiming my time. The answer is yes, sir. Mr. Gensler, you had an 18-year career at Goldman Sachs where you were partner and co-head of finance, correct?
Yes, sir.
Thank you. And is it correct to say that you made most of your personal wealth directly through your employment at this bank, Goldman Sachs?
I've done well since then, too, sir.
I'll take that as a yes as well. You described the SEC under your leadership as the cop on the beat watching out for our constituents, correct?
I think that's a mandate that Congress
Yeah, and I think
given
you've
us.
said that, reclaiming my time. The answer is yes, sir. If you could just comply with what I've asked, I'd appreciate it. But given your 18-year career at one of the biggest banks in the world and the personal financial fortune you amassed there, do you think it's possible for you to serve as an impartial regulator and not favor large financial intermediaries?
Absolutely, sir.
Well, Mr. Gensler, do you believe the vast majority of digital assets meet the investment contract test and are therefore securities operating illegally outside of the U.S. regulatory umbrella?
As I've said, many of these assets are basically the public is anticipating
Sir, is
profits
that a yes?
based on the efforts of others.
Is the answer then yes?
Again, without prejudging anyone, I do think that the significant
Reclaiming my
majority
time.
are
I'll take it as a
investment
yes.
contracts.
And to be clear, sir, this perspective has nothing to do with a concern you noted in a speech last year where you said, quote, "Over the past year, several bank executives have shared their concerns with me about the sheer number of depositors who have moved money from their bank accounts into crypto-related exchanges and wallets," end quote. Right?
The concern that those bank executives raised was that there's
Again, I'm reclaiming my time,
customers
sir.
were getting
No,
hurt.
I've asked you to answer the questions as short as I can so I can use the time I have, and it's clear that you would like to avoid answering the questions, in my opinion. An Obama-appointed judge in the Southern District of New York, a bank-friendly jurisdiction where you bring most of your cases, recently found that decentralized financial technology, quote, not only removes the so-called middlemen from these transactions, but it also allows users to interact through a variety of methods in an easy and efficient manner, end quote. The court also said underwriters, like the ones at banks where you work, sir, are, quote, precisely the types of individual roles that decentralized exchanges were designed to eliminate, end quote. Mr. Gensler, can you assure this committee that your style of regulation by harassment towards digital asset innovation is to the benefit of every American and not driven by your desires to protect industry incumbents?
This is a field that's rife with fraud and manipulation, and I'm looking out for the American investors who've been hurt by the crypto.
Yeah. I'll reclaim my time. Mr. Gensler, despite your years of rhetoric, like today, I'm convinced you are not an impartial regulator. Instead, it's clear that you are working to consolidate your own power, even though it means crushing opportunities for everyday Americans and, frankly, the financial future of this country. Even the federal courts are highlighting the damage you, sir, are doing to our constituents, and they're telling you that you don't have the legal authority to accomplish your goal of squashing competition in the financial markets. Congress has been telling you that too. Now, Mr. Gensler, I believe our great financial system is the definition of freedom in this country. And congressional policies must provide room for the traditional financial system to evolve alongside the disruptive digital asset ecosystem. That said, it cannot be understated that a common theme throughout your career, sir, is your relentless loyalty to the largest financial institutions at the clear expense of innovation, competition, and everyday Americans. I yield back.
I suspect some large financial institutions would not agree with that.
There's no question, sir. I've yielded back my time.
So, it's very clear that Congress is not happy with Gensler, and it's only a matter of time before he's either out of office, whether he resigns or he gets fired. And I have a lot to share with you guys in this video. So buckle up. I'm curious, what are your thoughts on this below? And also, before I dive into the rest of this video, I'm curious, how many of you guys smoke cigars? Because if there's enough people in the community, in the Bull Runners community that like cigars, maybe we launch Bull Runners cigars. That might be a cool option. But I have some ETF news for you guys to talk about in this video. Also have some breaking developments behind the scenes for bullrunners.com, our financial publication platform for the truth, the news that you need to hear, when you need to hear it, breaking crypto news, breaking finance news, because we give you the best to help you prepare for the worst. But the worst is yet to come for Gensler. Listen to this.
Mr. Gensler, good morning. I worry that the term investment contract has become so infinitely malleable and manipulable that it means whatever you unilaterally thinks it ought to mean, right? I worry that when it comes to crypto, your interpretation of the term investment contract has no limiting principle and therefore could invite arbitrary and capricious enforcement action. So I want to take a few minutes to explore the concept of investment contract in greater depth. And I want to start with an obvious definitional question. We know that an investment contract requires an investment. Does an investment contract require a contract?
Something about this definition, I will quote Thurgood Marshall, Congress painted with a broad brush. And when Marshall said that, he was writing the law of the land. So we follow this Howey test and how not just Marshall, but other courts interpreted it. And it has a four components.
I did not go to MIT, but in the Bronx, if I ask whether an investment contract includes a contract, the answer is typically yes or no. So,
actually, sir, under the Supreme Court law of the land, they do not write that in. They say it's an investment of money in a common enterprise, and you're anticipating profits based on the efforts of others. So, I took an oath to follow the law of the land, and that's the Supreme Court law of the land.
So in Howey, the Supreme Court refers to an investment contract as a contract, scheme, or transaction. That was the terminology that I saw in the case. And as far as I can tell, there's nothing in the Supreme Court's jurisprudence that suggests that a scheme or transaction means the absence of a contract. And so by way of illustration, consider the landmark case of SEC versus Howey. In the Howey case, there was not a single contract, but there were two contracts. A land sales contract with the Howey Company and a service contract with Howey in the Hills. And the court found that the combination of those two contracts, the total scheme, the total transaction, the total economic reality, was constitutive of an investment contract. And so a scheme or a transaction does not mean the absence of any contract at all. It means, as it did in Howey, a multiplicity of contracts. In August, there were 6 law professors from law schools as preeminent as Yale who came to the following conclusion, quote, no decision of the Supreme Court has ever found that a scheme that does not involve a contract could qualify as an investment contract. And so do you disagree with that statement? And if so, could you please cite a decision of the Supreme Court that has found an investment contract in the absence of an actual contract?
The SEC has been in front of multiple courts, and investment contract has been...
What's the name of the case, Mr. Gensler? The Supreme Court case that has found an investment contract in the absence of an actual contract. Do you have the name? Can you cite a case?
The SEC over the decades, whether it's
Can you cite a case?
Whether it's whiskey caskets, whether it's crypto, if the public is investing based upon the efforts of others.
I find it telling that you cannot cite a single case.
That's a security.
Not a single. How about a Second Circuit case? Can you cite a single Second Circuit case that found an investment contract in the absence of a contract?
I understand where you're trying to go, and I'm going to leave that to the very fine attorneys at the SEC in front of courts. But I'm saying the core principle
Mr. Gensler,
this is a field.
This is. Let me finish. This is a question to which you should know the answer, because the definition of an investment contract is the central issue. That's what determines the extent of your authority. That's what determines the applicability of federal securities law to crypto transactions. And your inability to answer that question is baffling to me.
I'm answering it consistent with what the Supreme Court has said, which is the law of the land is a 4-part test.
And yet you cannot cite a single case to support your argument.
Howey, it's called Reeves. It's called many cases at the Supreme Court, sir. 8 or 9 times it's been affirmed by the Supreme Court.
Can I ask, Suppose I were to purchase a Pokemon card. Would doing so constitute a security transaction?
You could purchase a Pokemon card. I don't know what the context is, but if you're just purchasing a Pokemon card.
If I purchase a Pokemon card, is that a security transaction?
Store, that's not a security.
Okay. If I were to purchase a tokenized Pokemon card on a digital exchange via a blockchain, is that a security transaction?
I'd have to know more.
Okay. So for you, the process of tokenization is what transforms a non-security transaction into a security transaction?
Look, if the investing
I thought you were technology neutral.
If the investing public is anticipating profits based upon the efforts of others and they're exchanging funds, that's the core.
I see my time has expired, so.
Now, as this news breaks, there's other news breaking out there right now about Ripple. They just decided not to proceed with their acquisition of Fortress Trust. We covered that in a previous video. Fortress Trust is a Nevada-based chartered trust company. So Ripple's CEO, Brad Garlinghouse, just announced this decision. And initially, this was on September 8th, earlier this month. If you're still watching this video in September, if you're watching this video in October, Ripple expressed their intention to acquire Fortress Trust for an undisclosed amount of money. It was rumored to be, around $250 million or less. They paid $250 million for Medico earlier this year. However, just before this announcement, Fortress Trust reported a significant theft, about $15 million, even though that's baby money in the grand scale of things. But this attributed to a phishing attack from an unnamed third-party vendor. So CoinDesk identified the vendor as Retool, which is a San Francisco-based company with Fortune 500 clients, responsible for creating a portal for Fortress clients to access their funds. So Ripple, they just clarified that the acquisition talks had started before the theft, but were expedited due to the theft. Now, obviously, they don't want to risk clients' funds, and Fortress Trust, led by Scott Purcell, I think that's how you pronounce his name. He previously served as the CEO of crypto custodian Prime Trust until 2020, which offers financial regulatory infrastructure for a variety of blockchain companies. And it's worth noting that Prime Trust, they faced challenges after BitGo terminated its planned acquisition of the company. So if you're wondering if this is bad news, you see this happening right now. I like to cover the good and the bad, give you the best, obviously. So despite the plans, Ripple expressed their continued support for Fortress Trust and in hopes for collaboration in the future if they're able to, figure the situation out, because obviously they don't want to risk customers' funds if there's potential hacks, if the trust is not really a fortress. So when we talk about rock solid crypto news in the space, good news happening, this isn't going to affect Ripple at all. It's like thinking about acquiring a company. If it doesn't work out, well, it doesn't affect your company. It's better to cut it off before you have something happen that could damage your reputation and your client's funds. So when we talk about Ethereum or Bitcoin, in regulation space and acquisitions and all that, well, what I want to focus on with you guys is the futures exchange traded funds and spot ETFs and what you need to know about that, because Ethereum futures ETFs might become available for trading in the United States as early as next week, as suggested by Bloomberg analysts. Because on September 28th, just recently, a Bloomberg intelligence analyst indicated that it seemed likely that the SEC would permit the launch of several Ethereum futures ETFs, within a week. So we'll see if this happens, because the insight came in response to ETF analyst Eric Balchunas, who mentioned in a hearing that the SEC wanted to fast track the introduction of Ethereum futures ETFs due to wanting to resolve the matter before a potential government shutdown. So could this all be part of the plan to move to digital currencies faster? And what the SEC is doing right now, who's funding, Gary Gensler behind the scenes to slow down this implementation? I think you guys know the answer to that, because currently, right now, there's 15 Ethereum futures ETFs from 9 different issuers awaiting approval, including notable names like, Van Eck, you got ProShares, you have Grayscale, you have Bitwise, and there's a 90% chance, according to analysts, they believe that Ethereum futures ETFs will launch in October. So, with Valkyrie's Bitcoin futures product poised to be the first to offer Ethereum exposure on October 3rd. So get ready for that. We're going to cover it on this channel. Make sure you subscribe to the channel. However, they do not expect all of the ETFs to launch at the same time. But when we see this approval happen, it's going to be a domino effect. And the potential for Ethereum futures ETFs, it's not as exciting as spot ETFs, because it's worth noting when you look at like Bitcoin futures ETFs, well, they've been available in the US, and whereas a spot Bitcoin ETF would be a much bigger development compared to Bitcoin futures ETFs and for XRP for several reasons here. All right. Number one would be a spot ETF would hold a direct representation of the actual Bitcoin. This means that investors in the ETF would have a claim to real Bitcoin, not just, a derivatives or a futures contract based on Bitcoin's price, because it provides a more direct and tangible exposure to, Bitcoin from institutional investors. Because in a spot ETF, the issuer holds the physical Bitcoin, which reduces the counterparty risk associated with futures contracts. And I know that might seem complicated, but in a futures ETF, there is a reliance on futures contracts and the financial institutions backing them, which can be super, super risky. And because the crypto community values, we all value principles of decentralization, self-custody, ownership of your private keys. That's why centralized exchanges like Coinbase or Binance or Poloniex or Kraken or whatever, they hold your private keys. And so when you have self-custody over your private keys in your crypto through like Trezor or Ledger, then you're a lot more, you have a lot more control rather than worrying about these companies going under. So a spot ETF aligns more closely with these principles because it represents actual ownership of Bitcoin, whereas future contracts are financial derivatives. So spot ETFs typically have a simpler pricing mechanism where the value of the ETF closely tracks the real-time market price of Bitcoin. And in contrast, when you look at futures ETFs, they can exhibit backwardation, which is basically price disparities between futures contracts and the spot price, which can complicate tracking the asset's price. So the approval of a spot Bitcoin ETF is going to provide massive regulatory clarity for the crypto market overall. And once Gensler, the reason why I bring this up is because once Gary Gensler is out of office, it's going to be much easier and faster to get clarity for the industry because they'll be more favorable for it. So Gensler is in a pickle right now, and either way, he's going to be forced to make a decision soon. So it would be a recognition by regulators that Bitcoin can be treated as an investable asset similar to stocks or commodities, which would cause the rally in the Bitcoin market because, Gensler obviously has to agree, even though he doesn't want to, he has to agree that Bitcoin is, an asset registered by the CFTC because that's a fact. It's not under question. And a spot Bitcoin ETF would likely attract more retail, massive institutional investors, making it more accessible to a broader range of market participants as more institutional money comes in. Because institutions, they've been hesitated right now. They've been hesitating to invest in futures-based products due to the risks associated with them. So spot ETFs will increase adoption investment in the entire cryptocurrency space. And the reason why this hasn't happened yet is because Gary Gensler, the crypto villain that nobody likes, right? And the institutions behind the scenes, well, could they be paying him off? I'll let you guys make up your own mind on that. But when Gary Gensler testifies, when he answers a question, because he doesn't give a direct answer, what is his incentive for that? It's either number one, it's either his childhood trauma. He wants to maintain power, so providing no clarity at all. Somehow he thinks that gives him more power by not giving clarity because then he's calling the shots there. Or number two, there's people behind the scenes that are telling him not to give clarity. So could they be paying him off? The SEC extended the deadline. They keep extending these deadlines. Number one, for reviewing Ethereum ETF applications by ARK Invest and Van Eck, and the new deadline for a decision on both applications is December 26th of this year, after 45-day extension from the original deadline, which was November 11th. So ARK Invest submitted its Ethereum ETF proposal back on September 6th, while Van Eck, which had initially filed for a spot ETF for Ethereum in 2021, they renewed its efforts on the same day. So the SEC cited the need for more time to review the proposals, which is complete BS. Why would they need more time when they can decide right now? They say they need more information. What more information do they need? Because currently there's 14 proposals, 14 for Ethereum futures ETFs that are pending with the SEC from various firms. You got Bitwise, you have Grayscale, Valkyrie, and Van Eck. So a spot ETF for Bitcoin and Ethereum, in my opinion, which I could be wrong here. You have to let me know your thoughts. If you agree, give this video a like. If you disagree, drop your thoughts below. But it's inevitable. It's going to happen. So, leading to XRP, how would that affect XRP? And could XRP have a spot ETF in the future? Well, in order for XRP to have a spot ETF, they would need to be listed on the Chicago Mercantile Exchange, the CME, before the SEC can approve a spot ETF. So, could it happen? Well, it's possible, but we would need to see a spot Bitcoin ETF approval first, because Bitcoin's obviously leading the market, and with an inevitable approval, this would cause a massive liquidity rush into the whole entire market, which would benefit XRP either way, because when the tide rises, so do all ships, and XRP is in the top 10. So we're preparing for that to happen. We're getting ready for that to happen. Obviously, this is not financial advice. Don't buy XRP. Don't sell XRP. Don't buy Bitcoin. Don't sell Bitcoin. Watch these videos for learning purposes only. But what we're doing to prepare is we're backing up our truck all the way to the bank. We're grabbing the bags, packing them, and stacking them, leaving no bags left behind, because the spending power of the US dollar, traditional fiat currency, is going down in value based on what the Treasury, the Federal Reserve, is doing. That's a fact. And blockchain technology, distributed ledger technology, cryptocurrencies are going up in interest. That's the truth. And together we're all going camping on the beaches of the moon. So I will see you guys on the next video. I will see you on BULLRUNNERS.com. Make sure to check that out, because once we drop our financial publication platform for you guys to get the latest and greatest news, you want to make sure you're subscribed to the channel. And as always, we're staying bullish, because together we're going camping on the beaches of the moon. So I will see you on the next video. I will see you on BULLRUNNERS.com. As always, you know what to do. Stay bullish.